Hello, everyone. I'm coming to you today with some positive developments in what has been an extraordinary 2 months during this coronavirus pandemic. My name's Leo Kelly. I'm the CEO of Verdance Capital Advisors. And in today's update, we're going to talk about the three categories which we have repeatedly said is so important in managing this crisis. And that is the economy, that is the science involved in fighting this, and unfortunately, the politics of the current environment. Yesterday, the Sp 500 crossed 3,000. That's an extraordinary accomplishment in a short period of time, given we were at 2,200 just 2 months ago on March 23rd. And I want to pause there because I want everyone to remember that moment. That moment when we made a bottom is important to take with you. The emotion you felt, the fear. Did you really think we would rally back this far, this fast? And the answer is, when you're in a bear market, no one thinks that's possible. And that's the point. And I realized that this was particularly scary, this shutting down the entire economy. But every bear market is scary. And when I say take this with you, it's to use for the next time we have these massive volatility swings. And that could happen in the short term or in the long term. So let's dig in. Why is the market up so much? That's the question I consistently get. How could it be up, Leo? And there's a couple reasons why. First of all, the S&P 500 is a bit disconnected from the main economy. The top 5 stocks in the S&P 500 right now represent over 20% of the index. That is extraordinary. The last time we saw that was 1999. It only happened a few times in the last several decades. So we're at a moment where the few are running the show. The broader market actually has not rallied as much as the S&P, but it is starting to rally now, and that's good news. So what is driving it? What's making the market go higher? Well, let's dig into the three main criteria. First, there is the economy. Now, we have used a term repeatedly, and we will use it over and over again, and that is rate of change. What's important here is not to look at where we are at the moment or where we have just come from, but what is the rate of change and where are we going? The market looks forward. It's already looking at 2021, not now. And so the rate of change in the economy has been horrible. And in March 23rd, there was at maximum uncertainty and everything was diving and the expectation was poor, and that's why the market went down. But today, the rate of change is starting to turn positive. It's slow and it's nascent, but it's positive. And we're starting to see as the economy reopens, things are improving. Consumer confidence is going up, gas demand's going higher. TSA is reporting a big increase in new flyers. Now, not nearly the 2 million flyers from last year, but up at 270,000, up from 90,000. We're seeing Google searches for vacations and navigational searches. In other words, we're starting to wake up again. So as states start to open and the economy slowly starts to recover, rate of change becomes the most important factor to watch. In terms of science, there's no question the rate of change here is very positive and moving exponentially. And this has been our main focus all along in terms of how we make decisions on whether or not to invest. Vaccines are obviously getting all the attention, and that's good. A vaccine would be an enormous win here and bring our economy back and let us all get back out again. And we are seeing incredible progress there. And that's what happens when all the smart minds go to the same place to solve the same problem with a lot of money behind it. So that's what's happening in vaccines. But therapeutics, testing, speed of testing, quantity of testing, and also, I would also say very important, is in the science world, is the data surrounding the models. The numbers are getting much better. It's a far cry from what we thought originally was going to happen, with millions of deaths and hospitals overrun and ventilators and so forth. So things are improving in the science world rapidly. Now, I'm not going to spend a lot of time on the politics. It's just unfortunately that this has gotten political. That said, we have never seen so few control so much of so many lives. And so the politics, while we traditionally say ignore it, is very important right now. The economy needs to open. Now, we know we have to do it safely, and we need to protect the vulnerable. I have family that are in that vulnerable category. So clearly, we want to make sure we're smart. But the good news today in terms of science, politics, and the economy is we know so much more than March. We know who the vulnerable are. We know social distancing. We're not shaking hands. We're not going out at the same levels. And so just if you think about the speed of the increase of this virus then versus now, just the fact that we know more, we're behaving differently, is going to create a different outcome. And so the hope here is that we don't see those models turn out to be as disastrous as we thought, and we can get back to normal. So all this leads to portfolios. In terms of portfolios, we're gonna say the same thing we have throughout the process. Discipline, discipline, discipline. We've rebalanced portfolios through the process. We've bought into these dips, and it was that discipline process that took us into those purchases. And anyone who did that obviously is very pleased with those decisions today. And that discipline has to remain. As the market rises, we can't get carried away with the movement of the market. We've got a lot of water to carry in this economy. We're going to stay disciplined inside of our portfolios. There are opportunities still out there. The market is bifurcated. Those top few stocks are up, but there's a lot of value in the market. There's value in the private equity segment. We're watching carefully in the fixed income world. This is just a time to be active and to be disciplined, and we're going to continue to do so. So hang in there, stay safe. We hope you're enjoying the beginning of summer, and we'll be continuing to come back here and give updates. I'm just glad to be given one with a more positive tone. Thank you very much. And again, as always, if you have any questions, please don't hesitate to call.